right, let's talk more about the banks. Bring in RBC's Gerard Cassidy. Gerard, great to have you with us. Do you also dismiss, like our traders, this Goldman Sachs for Wells Fargo report? And if not Goldman Wells, then what other deals might there be in your space?
Yes, I'm in the camp that dismisses that rumor as well. And the reason being is a couple of points. First and foremost, you're talking about two global SIFI banks, so-called GSIB banks. I don't think the regulators would allow two GSIB banks to merge. Number two, we're in the middle of a recession. And you go back to 08, 09, the only types of deals that are done in recessions are distressed deals because you don't know how to price the assets of either company. So very unlikely. Now, longer term, Goldman, I think, looks at the model that J.P. Morgan has built and really likes that model. So could something happen down the road? Possibly. But I'm in the camp that I would dismiss that rumor. That's not likely to happen.
What would Goldman be interested in buying, in your view?
Well, what they're trying to do is they're trying to grow traditional commercial banking businesses. We're all familiar with Marcus, of course. They also have the deal with Apple for the credit card business, so that's consumer lending. They're building out their transactional commercial business where they're going to be offering treasury products to their corporate customers. They're building up their corporate loan book. So when you look at the diversity that Bank of America has under Brian Moynihan and J.P. Morgan under Jamie Dimon, they have diversified revenue streams of not only capital markets and investment banking revenues, but also consumer revenues and commercial revenues. And I believe that's the ultimate goal of Goldman Sachs, is getting into that type of model.
In this environment, Tim was saying stock picking is going to be very important in this sector in particular. So what are your top picks, Gerard?
I think stock picking is going to be very important because some banks are going to behave and work better because of the underlying credit quality. One of the best names I think investors can own is going to be Bank of America. It's one of our universal banks, as you well know. The valuation is very attractive. Moynihan has led to the recovery in that bank and has built a conservative balance sheet, and that is very important in this type of environment. Another bank that I think is very strong is this Truist. Truist is the merger of BB&T and SunTrust. They have enormous cost savings coming. Not only that, they've been able to build up their loan loss reserves more effectively than other banks in preparation of the credit problems that the banks are going to have in the second half of the year. And then if people want to take on some risk, I think this PNC story is very positive too. They have the proceeds from the sale of their BlackRock investment, and they now can be opportunistic to build out their franchise over the next 12 months.
Are there regional banks that have specific exposures to different types of industries that may be hit the hardest, Gerard, or maybe being thrown out because the assumption is that they are hit the hardest?
That's a really good question because we know from experience when certain sectors of the economy are hit hard, as our leisure sector, if you want to call it that, we've got to be careful not to own stocks that have overexposure to those sectors. Now, fortunately, amongst the biggest banks, nobody has big exposures to hotels or to restaurants or to fast food companies that could be, problematic. They have exposure, don't get me wrong, but it's very small and manageable. When we look at other sectors, energy is one, and we know what happened back in the 1980s with the Texas banks. So to me, it's energy and the leisure sector, but none of our big banks have excessive exposure that would make us very concerned.
Okay. Gerard, we're going to leave it there. Thanks so much for your time. Gerard Cassidy of RBC Capital Markets. Some may be being thrown out with the bathwater, Tim, so I'm curious if you're finding opportunities since you are the one who advocated stock picking specifically for banks.
Yeah, I think so. Again, I mentioned PNC. I think some of the other regionals. Remember, there was a time after that SunTrust BBT, we thought there was going to be a whole flood of forced marriages of complementary strengths. I think you also look at the money center banks, and my point is that I think they were very conservative. I know it's impossible to know on where they threw those loan provisions up, but they were certainly putting them up there in excess in many cases of where we were in 2008 and 2009. So I think not every money center bank is created equal, but back to J.P. Morgan, which is best of breed and which has been very conservative in how they have built this business. I think for investors that are taking a medium-term view, this is exactly the environment after a crisis like this where you get opportunities with great franchises.
Karen, I believe that we know where you stand when it comes to J.P. Morgan. Are there other financials, though, that you own?
Yes, I do. I own Bank of America. I think I have most money at J.P. Morgan, Bank of America, and Citibank also. And I'm starting to look a little bit at German financials, which obviously have had just a very, very difficult run. Some of them are trading really like options at this point.
Like which ones? I mean, that really caught me off guard. German financials. I didn't think that those two words would come out of your mouth in that combination.
They rarely do, actually. So a Deutsche Bank, a Commerzbank, I'll look at that. I haven't done anything yet. I don't have positions there, but clearly we've seen how negative rates can hurt banks, right? Those are two examples, but they've really just gotten annihilated. They're so cheap, the value part of it makes me interested.
Guy Adami, I'll go to you. There's so many places to go here. Hey, Guy. Gerard's top pick is BAC. Karen is looking at German financials.
Yeah. It's interesting. I mean, I think Karen would agree. I don't necessarily know that a Deutsche or a Commerzbank can be a long-term investment. Maybe it can. I mean, I think to me they set up more as a trade. But, you know, I've been pretty steadfast in my disbelief and dislike of German banks, specifically Deutsche, for quite some time. In terms of the bigger banks, you know, Citi's trading at a huge discount to book value. I mean, a ridiculous one. Maybe that's trying to tell you something. But, you know, J.P. Morgan, the reversal today on decent volume, it could trade up to $100 in a flash, and percentage-wise, that's a pretty significant move. So if you're asking me to play the would you rather game, Deutsche, Commerz, BAC, it's JPM.